We're live, as always, not financial advice for educational purposes only. I do have, I want to run through all the indices and show you where we are on the monthly and weekly levels, including the VIX, SMH, just everything gold. We'll talk about that. And I also I will be posting my playbook after this on the SPX for the first hour close based off of my pivot levels, where you can sell premium based off of that first hour close. So I posted the touches and where it tends to finish. This first hour close is probably better as far as just for that, take that 1 hour trade and be done. So I will be posting that, and the percentages are really good based on the fact of like a first hour close between R1 and R2. That's what we consider a strong up day. It finishes above the pivot 83% of the time. So if we get a close above R1 on our daily levels, between R1 and R2, we close above that pivot 83% of the time. And I'm just showing the VIX on my screen right now, but I'm just using it as an example. So if we closed here, we know we can sell that pivot and have an 83% win rate based on everything that we have for the math for the past year on these. So that only happened 24 days last year. A mild close between the pivot and R1. We hold the pivot about 73% of the time. So that happened 156 days last year. And also when it finishes in this region for the first hour, it only climbs over R1 about 25% of the time. So you've got a 73% chance here and basically a 74 to 5% chance here. The numbers between the SPX and the QQQ are a little different, but, and I've got that and I'll post them, but just by a slight variance. So you can, you've got, like I said, 73 here, 70 here, maybe an iron condor or whatever you want to do. It closes green about 7 and 10 times and only climbs over this about 3 and 10 times. So it's about a 70-70 split right here. So we can learn to play that accordingly. First hour close between pivot and S1. I have all those stats. First hour closes between pivot and S2. Down here, I have all of those stats. So I've got the whole thing at a glance for you. That way, no matter where the first hour finishes, you know where to sell some credit and have 70 to 80% chance of odds of winning. And when you do that day in and day out, and you do it based off of your stop versus the spread on the what you get for credit, it's really hard to mess that up. And that's what I like. And it's just based off of that first 1 hour candle off of the SPX. So with all that, and I will publish it and we will talk more about it, let's jump into what we are seeing on the market right now, front and center. I know everybody likes to get theoretical or philosophical, I guess, with everything going on. And I understand that. There's a lot that's happening. Like I said, there's a lot of fires out there burning right now that that the United States is trying to put out. And one of the big ones is we're starting to buy our own treasury debt again. And we're doubling that actually because the yields are starting to take off. And that's just a big problem. Temporary relief for sure of what they're trying to do. And like I always say, two things: it won't matter till they want it to matter. And also they have levers to pull that we just don't even know. So don't get too bent out of shape with that stuff. Watch the VIX, watch your levels, and that'll take care of it because they tend to hold things and do things way longer than you expect them to be able to do it. So keep that in mind. I also want to say this though, as a caveat: 2008 financial crisis document that's on YouTube. It's free to watch. Go find it. Document. Of what really happened. It is amazing. Jamie Dimon's on there himself, the CEO of the largest bank in the world. And he talks about getting a call at 7:30 at night from, I think it was Lehman Brothers or one of them. He was at his birthday dinner in downtown New York. He gets a call on his cell phone. And they said, hey, we need $29 billion by the Asia Open or we're going to get liquidated. And he's like, I can't just give you $29 billion. And that's how all of the '08 financial crisis started. So keep that in mind, how fast things change. So like I said, it'll matter when these things want to matter, they will matter. Our debt and all this other stuff will matter when it's time. Right now, they're trying to hold everything. They got to politic. They've got to do all their whatever, and it's both sides of the aisle. The debt has just continued to climb. We're what, $40 trillion. The spending never stops. So how do we combat that? We'll see. We'll see what tricks they have up their sleeve and what they think will work to keep this market up, because that's what they're going to try to do for sure. You see a lot of the AI build out people selling their debt now, which is more appealing than the US Treasury. So people are buying Google debt bonds, all these AI companies that can make money, have a money printing machine basically behind the scenes, where we really don't have that as a country if you're buying the US Treasuries. So that's one thing that's been coming into play. People are buying those bonds. Like I said, Google's offered. I know maybe Meta. A lot of them have offered because they're raising capital to continue their AI pursuit, and money's flowing over there, not into U.S. Treasuries. So that's been an issue. The Japanese yen has been an issue, so we don't want them selling Treasuries to keep their market from collapsing. There's a lot of smoke out there. Where there's smoke, there's fire, but we just haven't seen the flame yet, is what I will say about it. The VIX right here, our monthly VIX, 1603, said, hey, until we get above this monthly pivot, we won't have a huge flush. And I've been saying for a minute, hey, we're down here in the bottom. The VIX usually has one way to go up, or one way to go, which is up, which it did. So we've had a few days of selling off. And what has been kind of the top of that sell-off so far has been this VIX pivot at 1603. When we get here, we can't continue the momentum of selling. And once we get above that, that's a different story. That's when it starts escalating and things will continue. Right now, we've got a decent overnight bounce, which they've been really good at doing, because that eliminates a lot of zero DTE options players and a lot of prop firm players. So people that are playing in prop firms, they can't, the ones that I know anyway, cannot trade overnight. So that eliminates those people being able to make profit. So they get this pop. We'll see if it continues to drop. One thing I do want to show you, like on the NDX, just because it doesn't populate the overnight data that I have turned on, because it's a futures only or a options only market. That gap play that is on the SPX and the NDX right here, a lot of people have their eye on that. And currently we're probably what, 200 points, so 400. We're about, I'd say 600 or 700 points above that on the NQ right now as we speak, because we had a 200 point overnight pop. When this closed, we were 400 points. So yeah, I'd say we're about 600 points ish above that gap. So keep an eye on this gap right here. I know a lot of traders are watching this gap fill to see if it gets filled and what happens at that point. So know that that's there. Same thing on the SPX. Okay. We are here. We were about 40 points above it at the close, and the S&P ES futures are up 30 points. So we're 70 points above that gap. Watch the gaps and know they're there, and understand that there's a likelihood that we will fill that. Not always though, not always at all. Sometimes they'll kind of do what they've done. They drop down in the top of it, then they take off, and they might continue to go. We'll just have to see at the open and see if it reverses. The biggest thing though that we're seeing, once we break that monthly pivot, it's no longer support, right? So we get above it. We have one support test, have a bounce. We break it here and we are bombs away. So we are 100 points below it right now. And that first target would be down here around that 75.50 on the monthly. The weekly is getting ready to expire today. We've almost reached S2, not quite. So We did break S1 and it became resistance. Do we go back up and test it, or do we roll over? Whatever your play is, play them at the line so you know when you're right or wrong. If you got short right here and left it alone and played the first target on the weekly, that was an easy trade, right? It breaks and it takes care of itself, right? And even the weekly pivot was actually a little better play because it broke from higher. And then once it takes off, it's just bombs away. So play it at the line. That's your edge. Wait for your edge. And that's where you play it. The NQ trading 500, 29,500. Same look, essentially broke the weekly pivot all the way down to S1. So that was a 600-point play. And now we are trading below R1, looking to see if we get down and fill that gap area and this little overnight run up, what they want to do. Remember, today is options expiration, OPEX. So a lot of wild moves can happen is what I will say there. We will look at oil because we know that everybody's got eyes on oil. We are up here. It's up just 0.5% this morning. Perfect bounce off of the monthly pivot, and we run higher. On the weekly side, it ran from the pivot, but you should have been already long right here on this test. Perfect test. I love the touch and get away. I love that idea right there. As soon as we touch, you get a long contract and it runs right away. I don't like when they buddy up, and I always talk about that. That's not my thing when they come down here and they touch and then they hang out. I'd rather see the touch and go. So oil's having a little bit of a go. Gold is sniffing out that we're going to have to keep printing a bunch of money and doing these things. We are above R2. You can see a perfect stair step up from the pivot, gets up here to R1. A little look below, but as an overwhelming ideology, it's holding. And if I look back, it was probably trying to hold on a level that we had. I don't have an exact level there, but if you were, let's say you're trying to short gold here, you short it at the pivot because, hey, I think it's rolling over, it's broke, it's not support anymore. On this retest, as soon as it gets back above, you get out because you're wrong. Okay, that's your edge. You're right or wrong right at that pivot. Same thing here. Hey, I think gold's going down, then we get green candles, so we don't want to get in the way of that. As soon as it gets back above, you're out, and you're thankful now because you're 200 points higher. If you were buying it, you think, hey, gold's still going. As soon as you get back above, you buy it and you go. Okay, that's your edge. The line is your edge. It's very simple. Don't muddy that water. I'd say silver looks about the same. I haven't looked at silver, but if I had to guess, it is close. Yeah. So pivot up here to R1, chop. And then you get this weird drop right here, which is probably just running stop losses because it knows everybody's in there. But I don't necessarily play a lot of silver futures, so not my thing here on that. SMH, our old buddy SMH that runs the market. DRAM yesterday, the memory stocks had a better day, which kind of held it along, I guess, held it in some form or fashion. But at the end of the day, I don't know why SMH is not loading. I guess my toss is having some issues there. At the end of the day, you just have to let it be. As far as knowing that it's OPEX, trade small. Why are you having trouble? Still connected, still showing real time. Clock's still ticking, so it's not locked up. Toss must just be having an issue. There we go. Now we're trying. Let's see if we can get SMH now. There we go. Just had a momentary lapse. When we went live the other morning, we had a perfect, we were here. I said, hey, we're running to the bottom of R1. That's caution. And then it flushed. And now we're, like I said, this kind of bleed up. Not my favorite look, but that doesn't mean they can't continue. We're right into S1. So caution here on SMH. Bleed right into S1. And now is that your top for the day? And it rolls over. I would keep a close eye on my weekly S1 on SMH, 569.98. If it gets above that and holds it for support, it can go higher. If it does not, look lower. Okay, we're not making we made a lower low, but then we made a higher high. So kind of an odd range right here on the 1 hours, right? So we had low, we make a high, which is lower than this high. Then we make a low, which is lower than that low. And now we've drifted up and we are at least equal. We'll call it equal right now. It's a shade taller or shade higher, but pre-market pajama traders are doing their thing. You got to kind of take that into context and understand what they've got going on. NVIDIA, I remember it was right here on that same live that, hey, we were bumping into the bottom of R1. And now you can see NVIDIA hasn't had much of a push here overnight. It's not making that high. It is sitting on S1. So watch your 217.16 on NVIDIA. And as always, keep an eye on that VIX. I don't expect a lot of volatility to come in until after Jackson Hole. I think Jackson Hole is going to be kind of a non-event. They're not going to raise rates, in my opinion. I think they're going to hold them and just sit here and say, well, inflation metric with the war, we got to wait for all that to settle. We've been waiting 6 years to get inflation under control, and it's still not at their 2% target. And I think they're in a very rock and hard place right now, because if they raise rates, the debt payment, the interest payment on our debt is like 1.2 trillion. Like it's just, they're in a really bad spot because we can't quit spending as a country. And then now we have these other issues going on that are causing inflation. And now the Treasury's jumping in, trying to mask, hey, we'll buy these treasuries with our own money to keep that interest down, because for other countries to buy it, they want more. So they want that rate to be higher. And right now they're not wanting to buy. Nobody's wanting to buy. So they're buying them. Just doesn't sound great, does it? But like I said, they have a lot of levers to pull that we just, as a little retail trader, we don't understand, and we don't know these people and what they're capable of and the tricks that they will play to make the outcome the best possible for them at that moment. So just keep all of that in mind. I think I'll leave you with that. I'm going to get my playbook posted for the first hour close. And if you don't have the indicator, you need it, because you need to be able to track that SPX 1 day pivot and pay attention to that and understand when that first hour closes, that is your green light to take these trades that are 70 to 80% profitable. Some are 75, some are as high as 83, some are as low as 67 to 69% on your base level plays. You can raise that level by changing levels, and I have all that in there. And we will mathematically go through that so you understand where your optimal plays are. But 83% chances of winning on a daily basis, depending on close, is a very, very good metric to use to your advantage and understand what the market is going to do and what it's probably not going to do for that day based on our pivot levels. I think I have some daily pivots over here. Let me change this to a 15-minute or 5-minute. And there it is. There's the daily pivots from yesterday. And we knew based on the first hour close that it only had a 70% chance of staying below the pivot. And I'm just looking at these numbers up here. Finishes above the pivot. Yeah. 72% chance of staying below the pivot yesterday. So if you sold this pivot spread and you set your stop, and you have to, it's kind of like a roller coaster ride, right? The money that you collect is based on the ride. You've got to take the ride. So that's why you have to know your stop loss versus your percentage on the spread, because what you're doing is taking this and letting it run to the end of the day no matter what. So on your stop, you can set it with the spread, or you can, if you get enough credit, you just risk the max loss versus the credit. And mathematically, it works out beautifully, because of the win percentages. And I have all that, and I will give that to you. For me, I like doing just a 5 wide because I know my loss on the SPX, and then you can do multiple lots. And based on that, at 5 wide with the percentage, you come out every time as long as you're getting enough for the credit. So I can't do a 5 wide up here when we're down here and expect that math to work out. Okay, because if something crazy would happen, and I have the percentages of if it closes between the pivot and S1, how many times it finishes above R2 on the day, which is very, 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 very slim, but you're only going to get pennies on the dollar to take that risk up here for the loss. That's not what we're trying to do. We're trying to get as close as we can with the highest percentage on the spread of a win and collect that premium. So they're juiced up, right? So the closer we are, the more juice they are. So when it closes below this on the first hour, when it gets back to the pivot, and if you sell that credit spread right there, that's like max money for that credit spread, right, for the day. You sell it there. If I'm selling the call spread here, it's saying, hey, I've only got a 75% chance that we stay below it. You sell it here, it jumps up here. It doesn't matter because you know, based on the math that you work out, if you do it every day, that it works out beautifully on your side. So you just take it and you shut it off, right? I've only got a 24%, 25% chance we finish above this. This is where you sell it, and that's where you win. So all of that to come in I will post this the first hour. I posted the touches and labeled it SPX the beginning. This will be your first hour closes, and we will put all that together and summarize it once I have more data and more information, because I'm still continuing to run things and get it. So now, not only based off of the touch of the levels and the time of the day. Okay. So that was my first post. Hey, if it touches this level at this time, this is your highest percentage win rate. After this time, this is your highest percentage win rate. Now I have the close. So instead of trying to track that, because that's a little more, the touches are a little more in depth, and you have to be there when they touch. The first hour is what it is, right? When that first hour candle closes, wherever it is on my map right here, every day, I have your highest percentage win rate of selling credits. If that makes sense. I can sell put call or put spreads or debit spread or put. I can sell put credit spreads or call credit spreads and know my highest possible outcome based on the data that I ran. And the good thing with this is I will continue to add data. So every week I will rerun it. Instead of having a year, we'll have a year and a week. Then we'll have a year and 2 weeks, and then we'll have a year and a half, 2 years, 3 years, and we will know exactly after that first hour close where we want to sell credit and why. And then on top of it, something that you guys probably haven't thought about is, how do I say I want to sell the credit, but I also want to put on a small hedge? How do I do that? A butterfly right now is your best option at that far call strike or put strike, whichever one you're long. You sell that that butterfly in that area, and I will show you how all that works. And then that hedges, you almost break even or even can make money depending on where it finishes if that goes against you. So if I can sell a $5 credit spread somewhere with a 75 to 85 or 80% chance of winning, and then on top of that, take a 90-cent butterfly at my long strike. So that way, if we get through my short strike, that's when the spread starts going against me, and we start getting to my long strike, which is where max loss incurs once it gets past that. If I sell a butterfly in that region for 90 cents, and then when we get there, all of a sudden I'm making money on it. So that's the way to do it. And 1 hour a day, 1 hour a day income trade. That's what I like the most. All right. As always, I will leave you there, and we will talk soon.